Hey, Bobby Trades! I want to do a video analysis update on the Nasdaq first, but mostly electric vehicles, software stocks, travel stocks, and cryptocurrencies. So here's the Nasdaq. It completes an ABC correction, then goes on a 1, 2, 3, 4, 5 waves impulse to complete a wave 1. I believe it is ending an ABC correction wave 2 at the 61.8% retracement. So just like Microsoft, if the Nasdaq is above 362, the length of this rally places this low, can take it on a wave 3 higher to 428 very aggressively. That can happen by the March quad witching date. I think more conservatively, that'll happen by the June quad witching date. We'll hold 362. Microsoft will hold 295. The Nasdaq will go up to 428. So those are really important levels for not just the stock market, but really a lot of equities. This is a wave 1 and a wave 2, a huge wave 3 and a wave 4 at the 38.2% retracement. So on the larger degree, conservatively, Tesla's within a wave 5, but the larger degree doesn't really matter right now. All that matters is the smaller degree from this low, wave 1, wave 2, wave 3, ABC, wave 4 at the 50% retracement. So 813 would be a little wider, 886 would be a little tighter. And if those hold, the length of this rally places this low and take Tesla up to 1590. I think that can happen by the second quarter. And I think that would be a clear 1, 2, 3, 4, 5 waves impulse. Show that this is a very important low. And then this is a 1, 2, 3, 4, 5 waves impulse. We look for a correction, but in the future, probably a buyable correction. So that's just something I'm thinking about. Let's get to 1590 first. Here is XPEV, wave 1, ABC wave 2, wave 1, wave 2, a large wave 3 is in progress. I think this is wave 1 of wave 3 and wave 2 of wave 3. I think we'll hold 38. A little wider would be 33. XPEV has a pretty high beta. I think both of those hold. I think XPEV is within a wave 3 right now. On the larger degree, this is wave 1 of wave 3 and wave 2 of wave 3. Wave 3 of wave 3 will take XPEV to 70 before a shallow wave 4 and a wave 5 higher. On all waves 1, 2, 3, 4, and 5 will show XPEV is a long-term IPO base breakout. So I bought XPEV at 29. I could call it a retail bag holder for 3 months, and then, all of a sudden it's up and doing well. So I'm not going to pretend that every growth stock I buy goes up immediately after I buy it. A lot of them go down, actually, because there's a much higher beta and there's a much higher, lower likelihood that you're going to just nail the low. That's almost impossible. It's a lot easier to kind of find a 5 or 10% range that a value stock isn't going to go below. Very difficult to do that with a growth stock. So there's higher risk and higher reward in growth. XPEV shows why it can be worth it. This is a wave 1 and a wave 2. I think we hold 33, go up to 70 before a shallow wave 4 and a wave 5 higher. That looks almost identical to Lee. XPEV outperforming Lee a little bit, but I think this is a wave 1 and an ABC wave 2. This is another wave 1 and another wave 2. I think we're within a large wave 3. This is wave 1 of wave 3 and wave 2 of wave 3. This is wave 3 of wave 3 in progress. So if we're above 25, a little better downside level than anything XPEV gives. Lee is going to 44 before a shallow wave 4 and a wave 5 higher. All in all, waves 1, 2, 3, 4, and 5 can take Lee above this IPO high, prove an IPO base breakout, and that could be huge if we see Lee and XPEV above this high for Neo bulls and for Tesla bulls and for a lot of clean energy bulls, a lot of Chinese growth bulls. That would confirm that this is the IPO base, and they have long-term plans for Lee. They have long-term plans for XPEV. We won't find out why, of course, until the price action happens, right? Then Benzinga, then, all the media outlets will say, this is why this stock is up. They're never going to mention Elliott Wave. They're never going to mention that they were being massively accumulated by the options market, right? They're never going to say that's why a stock is up. That normally is. This is a wave 1 and a wave 2. This is a 1, 2, 3, 4, 5. Another wave 1 and a wave 2 that ended between the 50 to 61.8% retracement. So I think that just like XPEV, just like Lee, there are long-term upside levels for Neo. Unlike Lee, unlike XPEV, there's not a clear low to trade against, but there is a clear fib. So I want to see Lee hold above 25. I want to see XPEV hold above 38. Very wide would be 33, and I want to see QCLN, that setup I talked about in my last video, play out, but I think this is a 1, 2, 3, 4, 5 wave 1 and a wave 2 for Neo. So the next step is that Neo will break this downtrend line. This clear downtrend can help confirm, if we break it, that this wave 2 is ended and we're within a wave 3 high right now. The next step would then be to see Neo go on a high volume IPO base breakout and show kind of what Micron just did, kind of what Qualcomm just did, kind of what Taiwan Semis in the Asian market just did, show that this was all accumulation. And there are big long-term plans for Neo. I believe there are. And if Neo is above 26, there's a lot more upside risk than downside risk. The length of wave 1, place at the wave 2 low, says after we get to 66, 100% upside from this level is just going to be the beginning. Ultimately, Neo can go to 93 for a minimum wave 3 target. So that's looking good. XPEV and Lee, very important charts. Enphase Energy, very important chart. This is a wave 1 and an ABC wave 2. I think that this is a wave 3, wave 4, and wave 5. So we did break below 143. I think there is a lot of evidence, though, that this is an impulsive structure. One of the facts is that Enphase Energy goes well past the 161.8% extension of this rally. A lot of wave theorists will say that means that this isn't an A, B, C correction. This is an impulsive structure. I believe this is an impulsive structure, and it lines up a lot with First Solar, lines up with a lot of Tesla, Xpeng, and Lee. Enphase Energy, Tesla, and NEO are all huge holdings of the QCLN ETF. This is a wave 1 and a wave 2, ending at the 78.6% retracement. So it's getting a little wider now, but this is a clear invalidation level. If Enphase Energy is above 108, then this is all wave 1, right? This huge 6-month rally was all wave 1, placed at the low. That means pretty, aggressively, by the end of the summer, we can see Enphase Energy get into the 300s, okay? So I think we're going to hold this low of 108. I think we're going to go break this high. We could break this high by the end of the second quarter pretty aggressively, but I think by the end of the third quarter, we'll see that a wave 3 is in progress, taking Enphase Energy up to 311. I like Enphase Energy and I like First Solar a lot for the long haul. But what we're seeing in Xpeng and Lee and even Tesla is that this could happen a lot quicker than, it's not going to be quiet, right? These are high beta stocks. If this is a wave 2 low, wave 3 is stronger and faster than the length of wave 1 placed with wave 2 low. So this could be wave 1, wave 2. If we're above 108, the next target in the bigger picture is 311. And that's a minimum wave 3 target. So a very good sign for a lot of clean energy bulls. Here is First Solar, another great sign. First Solar and Tesla and NextEra Energy, they all formed this exact same January 25th high. And then once we saw one of them break it, we knew kind of the other two were, and they did. So I think this is a wave 1 and a wave 2. I believe this is another wave 1 and another wave 2 that ended at 67. So from this low, this is, yes, another wave 1 and a wave 2 ending at the 78.6% retracement. So the length of this rally placed at this low can take First Solar up to 135 before a shallow wave 4 and a wave 5 higher. All in all, waves 1, 2, 3, 4, and 5 can take First Solar a lot higher. But right now, the wave 3 target even is pretty high from the current level. This is a wave 1 and a wave 2. So the minimum wave 3 target on a small degree says that from May 10th to November, right, a 5 or 6 month rally, we can see that gets replicated just like Enphase Energy, taking First Solar above 135 before a shallow wave 4 and a wave 5 higher. All in all, waves 1, 2, 3, 4, and 5 in the longer term cycles, in the bigger picture, can take First Solar much higher than the current levels, all the way to the 170s. So that's what I see for First Solar. That's what I see for Enphase Energy. Great downside level is First Solar above 67. Here is Plug Power. Plug Power broke below this low, but I still believe this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. So we've seen a lot of activity on Plug Power options and fuel cell. We'll talk about Plug Power specifically in this video, but I think this is a wave 1 and a wave 2 ending at the 78.6% retracement. So if we're above 18, I think this is a wave 1 and a wave 2. Now, we did break below 23, so that's got to be into account. We broke the original stop, but I think this is a wave 1 and a wave 2. If we're above 18.47, a wave 3 is in progress to 63, and then we'd see a shallow wave 4 and a wave 5 higher. All that really matters right now, especially given that 63 would be nearly a 300% rally from the current levels, but that would be 1, 2, wave 3, shallow wave 4, and a wave 5 higher, just like Xpeng, just like Lee, just like NEO potentially. That's going to confirm this was all institutional accumulation. And one thing that I think that's pretty cool about Plug Power is that First Solar and Tesla and NextEra Energy all formed this exact same high. And one of the themes that we could see is that the small cap clean energy will follow the breakouts of large cap clean energy names like Tesla, Enphase Energy, and First Solar, breaking above those highs before the rest of them. So here is Boeing. I'm talking about Boeing right now. It started to look good. It's not, anything to celebrate yet, but we're starting to see new year, new leaders, right? This is another one up. I'm wrong about it, but I've always said that I think Boeing was a really good long-term idea. And the thing with kind of long-term ideas is that you don't really know who's right or wrong until after a long time has passed. So I think this is a 1, 2, 3, 4, 5 waves impulse for Boeing, and that's ending a large wave 1. So what does this mean in the bigger term picture? That could be a huge wave 2 low, and that means that this entire multi-year rally could have been just a wave 1. We ended a generational wave 2 low, and now a monster wave 3 is in progress, and that's on the larger degree. On the smaller degree, it's almost even more impressive that this is a wave one and a wave two. This could be another wave one and another wave two, ending at the 61.8% retracement. We could see not too far away that Boeing is above this wave one high. That means that this was nearly 2 years of accumulation. Nearly 2 years of accumulation on Boeing, right? This is the stock that we need to live. This is a huge wave three in progress. And just getting to the 161.8% extension, that's 363 before a shallow wave 4 and a wave 5 higher. But right now, if we're above very tightly 185, 170 would be a little wider. This is wave 1 and wave 2. Wave 3 is in progress right now to 363. And what we've just seen is that oil stocks have begun ripping. And one thing I've said recently is that the next time oil rallies, we're going to see the airlines and the industrials join them. And we're starting to see some pretty notable outperformance from the value stocks, the industrials, what I refer to as the banks and the tanks. So this is a wave 1 and a wave 2. If we're above 170, 185 is a little tight. We're going to go on a wave 3 higher to 363 before a shallow wave 4 and a wave 5 higher. I don't think Boeing's going to be so boring anymore, but I think the bigger idea is that Boeing was being accumulated this entire time, right? Just think to yourself, how long have we been making fun of Boeing bulls, right? And what we could find out in a couple of weeks, in a couple of months, more conservatively, the institutions were accumulating the crap out of Boeing aggressively this entire time, right? So we were being called, retail bag holders, right? But the institutions were accumulating aggressively. The institutions aren't worried about being called wrong on the internet. They don't get margins out of their positions. They don't go all in and get liquidated and get emotional and tweet in all caps. They quietly accumulated Boeing this entire time. This is a wave 1 and a wave 2. A wave 3 is in progress to 363 at minimum before a shallow wave 4 and a wave 5 higher. Ultimately, I'm expecting that Boeing 1, 2, 3, 4, and 5 can take Boeing above this all-time high. And then that's when we really know, unfortunately for some, too late, that Boeing was being accumulated and that this kind of monopoly, this literal monopoly, was being aggressively accumulated by large institutions. It's going to be the most breakout. It's Boeing. It didn't seem like during that sell-off. Okay, so that's kind of a theme that we see. They make the best opportunities difficult, and then all of a sudden, Pfizer breaks out of a 20-year base, right? Nvidia and AMD and Microsoft explode, and we say, right? It's a blue chip. This is a wave 1 and a wave 2 for XLE, a wave 3 and a wave 4, and a large wave 5 is in progress in a pretty conservative count. This is a wave 1 and a wave 2 that ended at the 50 to 61.8% retracement. If we're above 50, there's not really, the setup is in progress. We're almost at the wave 3 target, right? But this is a wave 1 and a wave 2. This is another one. Large institutions aggressively accumulating options, right? Then we have a sell-off, right? Everyone says, retail bag holder this, retail bag holder that. But the large institutions, they had already bought their options on the oil stocks. This picture is from November 15th. They were loading the boat on options, right? So then they used that selling climax to bring out the all caps bears before the explosive rally. And that's exactly what happened. Wave 1, wave 2, wave 3 to 66 to 68 is in progress. We're almost there before a shallow wave 4 and a wave 5 higher. XLE looking good. I'm looking for maybe we'll see some sideways action in XLE in the future, and maybe that's when we'll see tech pick up the leadership. That's just in the back of my mind, but oil doing well, and we didn't care about oil in late November. Now we care about it now. That's very interesting. 1, 2, 3, 4, 5, wave 1 and a wave 2. Now I believe another wave 1 and another wave 2. Oxy is within a wave 3. So we actually got great evidence from Oxy today. I think we got great evidence. Let's see. 35.66. So Oxy came within 10 cents. 9 cents of breaking this high. So when Oxy is above 35.75, we'll know somewhat factually that this is a wave 1 and a wave 2. The minimum target for Oxy, this equal X target would be about 40. The 161.8% extension is 44. So this could be a really nice gauge for XLE, and a lot of oil stocks is getting Oxy to 40 to 44. Really, on a pretty small degree count, that would be a nice kind of profit taking place before a shallow wave 4 and a wave 5 higher. But Oxy kind of shows a more bullish runaway train view of oil, right? And we didn't care about oil a couple, weeks ago, right? But think about it. If you're a fund manager and you turn in your report card in March and you didn't own any oil stocks this quarter, how much money do you think you're going to be managing in the second quarter, right? So leadership changes. New quarters, new years, fund managers have to react to new changes in leadership. If we see at any point in the future that the Chinese growth stocks or the software stocks or the small cap clean energy stocks take over the alpha, is not really going to be a choice for fund managers. Oh, do I buy the stock? They're going to have to buy the stock, right? They have to own oil. If they turn in their report card in March and they never owned oil in Q1, they will not have a job in Q2. So that's called the alpha chase. Here is Disney. Disney's looking good. Someone said I was wrong about Disney. Okay, we'll see. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2, right? So people's biggest fear in life, right, is being called wrong on the internet. That's not mine. Mine's a little bit of the opposite. My biggest fear is that people use Apple products and Netflix products and Amazon products and Google products every day for 10 years, right? But no one ever actually went out and bought those stocks. And I'm not saying that people should go buy these stocks, but I've bought, a lot of stocks that are kind of part of my everyday life, right? Like, Pfizer, obviously, was a pretty big part of American life. And that's kind of something that I like to do. I like to buy stocks that the world needs. This is a 1, 2, 3, 4, 5 wave 1 and a wave 2 for Disney. I think this is another wave 1 and another wave 2. Just like Disney, this is just like Boeing. This is a monopoly, right? So it's going to be like, oh, duh, right? It's Disney when it's in the 200s, but it's not, oh, duh, now, So I've always said that I think Disney was a great long-term idea. When it was right here and it formed this low in May, I was looking for a wave 5 higher, a marginal new high. But I always said that after that high occurred, I would look for this wave 1 to end and a wave 2. So the wave 2 was actually in progress. So yes, I was wrong that Disney would go on a wave 5 higher, but I've always been looking for a really nice wave 2 buying opportunity right near the 50% retracement. And I think we're getting it right now. 1, 2, 3, 4, 5, wave 1, ABC wave 2. So right now, I want to see the 61.8% retracement of 126 not get broken. I'll say right now that if Disney did get to 126, I would be more happy about it for the opportunity than I would that I'm wrong on the internet. But I think this is a 1, 2, 3, 4, 5 wave 1. And an ABC wave 2 at the 50% retracement. So I think Disney, it's a streaming stock and it's a reopening stock. I think it's evidence for both sectors. And I think it's a great opportunity. Wave 1, wave 2. I'm looking for a high volume IPO base breakout to confirm this was all accumulation, which I think it is. The length of this rally, place of this low, can take Disney in the future to 267. This is an 11-month rally. So it's actually basically a 1-year rally, almost exactly. So if we see kind of proof that a wave 3 is in progress, the minimum kind of time expiration and price target would be that, a year from now, very conservatively, Disney is near 267 if it's above 126. So much higher than a 3-to-1 risk reward ratio right there. So that's Disney. Here's Draftkings. It's very similar to Disney in the sense that it is both a reopening stock and it's a growth stock. As a 1, 2, 3, 4, 5 waves impulse for Draftkings, wave 1, ABC, wave 2. Now we're at the 78.6% retracement on a growth stock. So what's the risk reward here? Well, the risk reward is that at any point in the future, Draftkings can get above 74, right? At any point in the future, Draftkings gets above 74, that's not only 300% higher than the current levels, that would confirm, just like a lot of stocks we talked about, that this is accumulation. Right? The institutions, they're not worried about being called wrong on the internet. They're loading up the boat because they don't get margins out of their positions. They don't read some headline or some news article and say, I'm going to sell Draftkings here, impulsively for tax loss. I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. We're at the 78.6% FIP. So for downside levels, I want to see this wave 1 high of 19.50 not get broken. Then I think this is a wave 1 and a wave 2. The length of that rally, place of this low, can take Draftkings in the future to 87. So 87 is the eventual wave 3 target. That's not too far away from really just breaking this wave 1 high of 74. But that's the risk reward right there. If we see at any point in the future that Draftkings breaks above this wave 1 high, especially if it's kind of like what Micron and Qualcomm and Taiwan Semis just did, where it's on higher than average volume, it's going to be the classic textbook base breakout. This is the left side of the base. Up. Draftkings is boring, retail got scammed. This is the right side of the base where all of a sudden, we're hearing all these great things about Draftkings that must have not been true during the sell-off. So anyway, here's Netflix. Netflix is great evidence for large cap tech, but I also think it's incredible evidence for streaming and some software names. So this is kind of the large cap name that had a nice breakout. 1, 2, 3, 4, 5. Wave 1, ABC wave 2. So I predicted dollar for dollar this move. And that's something that, the all caps bears. And, I don't even like calling people trolls, but, it's like, wait a minute. how did you counter trade me and miss Netflix? How did you counter trade me and miss Nvidia, Microsoft, Advanced Micro Devices, Qualcomm, Apple, Pfizer, Tesla? And that's just the few that I really focused on, right? There were plenty of others that I just talked about a couple times, and they immediately did well. So let's just kind of address the elephant in the room. Ever since I got 30,000 followers, all of a sudden, that's just that big psychological number that people think that I'm some type of guy. I'm doing a lot better than I was, a few years ago with my calls, but I'm getting a lot more criticism. And I think that, let's just say, what is this guy saying? It's okay to give kudos on the right picks, but he got wrong on Roku, Neo, Palantir, TWO, IBM, and Disney. So I don't think I'm wrong about Disney. I don't really think I'm wrong in the long term about how Palantir, TWO, Roku, or Neo. But both of those stocks did break this low. But let's just read this. It's okay to give kudos on the right picks, but he's got wrong on Roku, Neo, Palantir, TWO, IBM, and Disney, and many others within the past 6 months. Okay, so he didn't mention any semiconductor stocks. He didn't mention any big tech stocks, which is interesting because the counter traders they never got those, right? They never shorted Nvidia. They never shorted AMD. They never shorted Microsoft. They never shorted Tesla. They never shorted Bitcoin from 12K. But they perfectly picked these specific stocks. But this is what's really interesting. So he says, within the past 6 months, I show only about 50% of the good calls, which is not that high of a percentage. That's a great percentage because each of these names that he listed, that's a higher than 1 to 3 risk reward. So this is kind of an independent third-party review. He says, hey, this guy has a 50% hit rate. And this is awesome because this guy clearly is not biased for me, right? This guy clearly is not someone, he's not like some family member, it's not like I'm getting a participation trophy. This is a guy who's clearly very critical of me, and he's saying, hey, this guy's right about 50% of the time. So I'm taking 1 to 3 risk reward ratios, and if I'm right 50% of the time, then that's a great sign. So thank you to this user. This isn't some type of gotcha, but I could have never gotten this without having a social media account, someone giving an objective third-party review and saying that I'm right about 50% of the time. So thank you very much. So here is Netflix, 1, 2, 3, 4, 5, wave 1, ABC wave 2 at the 78.6% retracement. The length of wave 1 placed at the wave 2 low. Says we're going to get Netflix above this high, hopefully on higher than average volume. And based on time, this is from May to November. So I can see a 6-month rally where we take the length of this rally, place at this low. We're going to have a nice breakout for Netflix. I think this is great evidence. We are at the 78.6% retracement. So if we're above 478, the length of this rally, place at this low, can take Netflix up to 750 for a wave 3 target in the future. That could happen this summer, but I think Netflix is outstanding evidence for a lot of the software sector, a lot of the streaming sector. Here's Amazon, right? Everyone wants to counter trade me now, so they're shorting Amazon at 3.2K. I think that's an awesome idea, guys. Awesome. 1, 2, wave 3, and wave 4. So I think we're within a large wave 5 right now. This is a wave 1 of wave 5 and wave 2 of wave 5. I believe, yes, this is another wave 1 and another wave 2. If we're above this low of 2,881, then a large wave 3 is in progress. This is wave 1 of wave 3 and wave 2 of wave 3. So the length of wave 1 placed at the wave 2 low. We'll take Amazon up to 4K before a shallow wave 4 and a wave 5 higher. So that's 1, 2, 3, 4, 5 waves. That could be 4,660 that we see just to complete this blue wave 3. So for time, this is from March to, July, right? So 4 or 5 months, 3, 4 or 5 months, we could see Amazon at 4K, and then that would be great evidence for a lot of big tech if Amazon got to 4K, because that's the minimum wave 3 target. We'd have a shallow wave 4 and a wave 5 higher, and if Amazon's going to 4.6K, 1, the stock market probably won't crash during that time, but 2, most likely that's going to confirm that we have shifted leadership. We are now in a software market. We are now in a e-commerce market, and we are now in a bunch of stocks that we've called weak losers, that all of a sudden the large institutions, if they want to have a job in the future, they're going to have to own these names. So I think that Amazon shows this could be 1, 2, wave 3 in progress to 4K before a shallow wave 4 and a wave 5 higher. That's going to be very good for a lot of the e-commerce sector. Here's Salesforce. It's more great evidence for software, and I think it's a nice setup right here. So this is a wave 1 and a wave 2. This is a wave 3 and a wave 4. I was bullish Salesforce right here. Got called a retail bag holder when it fell, and then all of a sudden everyone forgot about it. But I think this is a wave 1 and a wave 2. Or then a wave 3 higher to about 330 before a shallow wave 4 and a wave 5 higher, but that would be the minimum wave 3 target if we got to about 330 before a shallow wave 4 and a wave 5 higher. Just like Amazon going to 4K, the length of this rally, which is it's a little longer than Amazon's rally. This is from March to November. So 5, 6, 7 months, we could see wave 1, wave 2, wave 3 to 330. But just like Amazon at 4K, that's a conservative wave 3 target. We'd have a shallow wave 4 before wave 5 higher. So the length of this rally placed at this low, that can take Salesforce all the way up to 420. So that's very cool. Here's ARK. I think Salesforce holds about 201, heads into the 300s, and then eventually the 420 range. Wave 1, wave 2, another wave 1, and an ABC wave 2 for ARK, right? We're at the 61.8% fib, right? And it's being compared now. Now it's being compared to 2001, right? So honestly, if you made money shorting ARK in 2021, that's awesome, right? I don't have anything against people who make money. According to this guy, right? This is what's very interesting. According to this guy, I'm right about 50% of the time in the past 6 months. And that's kind of very similar to the numbers that I came up with. So it's an interesting situation, right? Because if I really am right 50% of the time, then that means in theory, someone could counter trade me and develop a nice system, right? But that also means in theory that I myself have a nice system. So it's a very interesting dichotomy. If I'm right 50% of the time, which according to this third-party user I am, then someone actually could develop a nice trading system doing the opposite of me. But that also means that I myself have developed a nice trading system. So that's just something to think about. Anyway, wave 1, wave 2, another wave 1, and another wave 2. I think that this is a huge wave 2 ending at the 61.8% retracement. So I think if we're going to go the length of wave 1, place of the wave 2 low, down the road, in the future, ARK can see 208. That is much higher, nearly 200, 300% higher than the current levels for an ETF. And that's a minimum wave 3 target if we get there in the long term, right? So right now, not the best downside levels, but we are at exactly the 61.8% retracement. I didn't invent the golden ratio. This could be a 1, 2, another wave 1, and another wave 2, ending at the 61.8% retracement. So the length of wave 1, place of the wave 2 low. The first step right now is kind of very similar to NEO that we've confirmed. This is the left side of the base. We have a right side of the base, high volume IPO base breakout. We do quite well. We get ARK into the 200s in the future. But all I want to see really for 2022 is that ARK will end wave 2, which I think it will, at the 61.8% retracement, reverse and have a high volume IPO base breakout above 160. That would be much higher than the current levels, but more importantly, that would confirm in the long term that ARK just was being accumulated for a year and a half, right? And no one's ever gonna come say, oh, right, it actually was a good idea to be buying dips in ARK that entire time, right? No one's ever gonna say that. No one ever said, hey, actually, he was right about NVIDIA. He was right about Microsoft. He was right about Home Depot. He was right about AMD. He was right about Netflix. He was right about Tesla and Bitcoin, right? No one's ever going to say that. They're just going to bring up the stocks that I'm currently wrong about that day. And guess what? There's always going to be a stock that I'm talking about that I'm wrong about at some point. So I think that I'm wrong about ARK right now, but I think very similar to NVIDIA and Home Depot and AMD, we'll find out how long that stays. But this is a wave 1 and a wave 2 at the 61.8% retracement. I think we end wave 2, going a wave 3 higher to 159. I love the ARKF chart. So we'll talk about ARKF right now. The wider invalidation for ARK is the 78.6% retracement, which is 60. ARKF is just kind of the financial side, the fintech side of ARK. So it's mostly PayPal and Square Cash, which we'll talk about right now. But this is a 1, 2, another wave 1, and an ABC wave 2, where the length of wave A, place of wave B high, is where wave C ended. So in the future, if ARKF is above this high at any point in time, then we know two things. One, this is accumulation, right? Square Cash and PayPal, they're being accumulated this entire time. Everyone who feels dumb is eventually going to realize they might have bought MasterCard in 2008, okay? Or what the bears think is that this is 2001 and we're going to zero. So I think that it's not that. I think this is a wave 1 and a wave 2. I think this is another wave 1 and an ABC correction wave 2 at the 61.8% retracement. So the length of wave 1 placed at the wave 2 low can take ARKF on an IPO base breakout above 64. And just then, that's an ETF nearly doubling. But the minimum wave 3 target in the future is that the length of wave 1 placed at the wave 2 low can take ARKF to 81. That's more than double the current price for a minimum wave 3 target. before a shallow wave 4 and a wave 5 higher. So they're going to make these great opportunities difficult. This is an ETF. So if this is an ETF that holds Square Cash and PayPal, then they're going to be really outperforming if ARK goes to 81. But really, I kind of like ARKF because it's got exposure to PayPal and its exposure to Square Cash, and ETFs generally have a little lower beta. So if we're above 27, I think it's a great level to stay above. The length of wave 1 placed it way too low. I think ARKF much higher into the 80s in the longer term cycles. It won't be easy, but in my opinion, it'll be worth it. So let's actually talk about Square Cash and PayPal first before we talk about ROKU, Zoom, and Fastly. But for all these kind of stocks, especially ROKU, Zoom, and Fastly, we're at the 78.6% retracement. So the best invalidation levels that I will be able to have are from ARKF and ARK, which is 27 and 60. So when I invest in growth stocks, I take half the position size that I would for a value stock to compensate for the beta, and then I just hold them and get that exposure forever. If I never need it, I never need it. That's why I took a smaller position size. But let's talk about MasterCard right now, because I just want to show what kind of the dream is, okay? It's okay to kind of, you can think that the bear dream is that this is 2001, right? So that's what the bears think. And that's okay. You're allowed to think that. You can think that this is 2001 and I'm some idiot that thinks, Square Cash is going to the moon. You're allowed to think that, okay? You're allowed to think that. I want there to be opposing opinions. I really do. I don't want there to be curse words or inappropriate GIFs, but I want there to be opposing opinions, okay? So let's just talk about MasterCard right now. Let's scroll all the way back to 2008. I probably could have done this by looking at the weekly chart, which I will right now. But this is MasterCard. We're going to look at 2008. And I'm just going to show you guys what I think could be happening, in PayPal and Square Cash, okay? So if someone tells you right now that they're going to buy MasterCard, you're not really going to probably think twice about that. You're not going to call that person a gambler. You're going to say MasterCard's a pretty stable investment, pretty low beta, pretty standard that someone would own MasterCard, right? Well, guess what? You wouldn't have said that in 2008. MasterCard in 2008 goes on this big rally that we call Wave 1. Yes, I know this is hindsight analysis. I know that I did not call the MasterCard bottom in 2008. But what I'm saying, this is what I could see for PayPal and Square Cash, and this is really where the idea of risk reward comes in. So this is what I see for PayPal and Square Cash. This is Wave 1. This is Wave 2 at the 61.8% retracement. So a MasterCard investor, they got told they were scammed. They got told that credit cards were a fad, and they got called retail bag holders for a year. And that's MasterCard, right? This is a credit card company. Even PayPal and Square Cash, if we actually look at the charts, they have not been this dramatic in the past year. And MasterCard did all this in 6 months. What I see is a possible analog for Square Cash and PayPal, right? The bears think it's 2001, and that's okay. It could be 2001. What I see is 2008. Wave 1, Wave 2. If Square Cash and PayPal are ever above the 2021 high, my opinion will be that it is MasterCard in 08. It is possibly NetEase and Amazon in 08. We'll go over NetEase as well. But if we're above this high at any point in the future, what's the best move for a hypothetical non-existent shareholder who bought PayPal and Square Cash during this dip? In my opinion, it would be to not sell for 10 years. For 20 years. We could see that the best thing to do is hold. Hold through this. Hold through this. Hold through this. Hold through this. We don't know what PayPal and Square Cash could be. We don't know, and that's not a bad thing. We don't know what XPEV could be. We don't know. That's okay. Let's talk about Square Cash right now. This is a Wave 1 and a Wave 2. I believe this is another Wave 1 and another Wave 2 at the 61.8% retracement. So Square Cash, to me, there's a lot of evidence for Square Cash that this is at least a Wave 1 and a Wave 2. And this is kind of something that we see a lot of in the ARK chart. Wave 1, Wave 2, another Wave 1, and another Wave 2 for Square Cash at the 61.8% retracement. So I think the Square Cash will hold above 101. The widest level would be 87. So 87 is a lot further than when I originally started talking about Square Cash and PayPal. So I'll wear the scarlet letter. I was wrong that Square Cash and PayPal would hold this low, which is why I said those lows were stop levels. But now we're at the 61.8% retracement for ARK, for ARKF, for any stock that's really in ARK, basically. We're at the 61.8% retracement. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2 at the 61.8% retracement. So the length of wave 1 placed at the wave 2 low says that we will see at some point Square Cash is above this high. We will see at some point that the institutions were accumulating. Basically, PayPal and Square Cash are kind of entire sectors, right? Basically, the entire eCash sector, not all of it, but a good chunk of the eCash sector is just Square Cash and PayPal. What they could have been doing is just accumulating the boat. And right now, if we hold the wave 1 high on the larger degree of 101, I think it'd be very difficult for Square Cash to get below that level. I think this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low says that ARKF will hold 27. I think that Square Cash will hold 101, and we're going to go significantly higher. Okay, all these stocks, ARK, ARKF, PayPal, Square Cash, they're all at the 61.8% retracement. We'll look at PayPal next. But Square Cash is a very pretty wave 1 and wave 2. So we got to figure out what's this. There's not really too many other ways to count it. If at any other point in the future we're above 289, the length of this rally placed at this low, that can take Square Cash to 385 for a minimum wave 3 target. A minimum wave 3 target before a shallow wave 4 and a wave 5 higher. So there's only one actual guarantee in trading. They will make the best opportunities the most difficult. And I think right now, getting called a retail bag holder on the internet, for me, it's going to be worth buying Alibaba. It's going to be worth buying XPeng. It's going to be worth buying fintech. So the length of wave 1, place at the wave 2 low, can take Square Cash dramatically higher in the future. We need downside levels. So we'll talk about downside levels. Here's PayPal, nearly identical. Wave 1, wave 2, another wave 1 and another wave 2 at the 61.8% retracement. If PayPal is above 124, the 78.6% retracement is a little wider of 130. Now, I've wanted to see for a little bit that PayPal wouldn't break below 171. As of this video, 171 to 169, $6 or $7 away. So right now, ARKF is the best chart for Square Cash and for PayPal, that it will hold above 27. We will go the length of wave 1, place at the wave 2 low. We will go to 404 in the longer term cycles. So yes, just like Square Cash, just like, a couple of ARK names, probably a lot of ARK names besides Tesla, I was wrong that we would hold these May lows, these March lows. But I think this is wave 1. I think this is wave 2. The length of wave 1, place at the wave 2 low, says that at any point we're above 310. At any point. The minimum expectation, even if you're a bear for PayPal, is that we're going to go the length of this rally place at this low. So what does that mean? Even if you're a bear, how could a bear think that PayPal is going to 400? Well, they don't right now. But from an Elliott wave perspective, if we ever see in the future that PayPal is above 310, the Elliott wave bears, if they're being honest, are going to say, even if that's a wave A and a wave B, the minimum wave C target is the length of wave A, place of wave B high, which is 404. So that gets confirmed when we're above 310. So it's not confirmed yet. I think it will be, though, that this is an ABC correction. And at the very minimum, we'll break above 310, show that PayPal and Square Cash are both incomplete to close to 400. Right now, I want to see ARKF above 27. I think that there's pretty high despair in the eCash sector. Probably why I have to scream 20 years as loud as I can. But if we're above the 61.8% retracement, most importantly, if ARKF is about 27, I do think PayPal and Square Cash will turn around. So I really like ARKF. I'm probably going to buy ARKF Monday morning just to get that exposure. Here is iPay. iPay is a great chart. It's a lot of evidence, I think, because it's very similar to Visa. Wave 1, wave 2. I think this is another wave 1 and an ABC wave 2 at the 78.6% retracement. So the length of wave 1, place of the wave 2 low, if we're above 50, says that iPay and Visa and Square Cash and PayPal is going to turn around. It's going to go break this high, and it's going to go the length of wave 1, place of the wave 2 low, all the way to 77. So I said that ARKF is the best chart. I think iPay is the second best chart for PayPal and Square Cash. It will hold above 50, which is a little tight, but it's an ETF. So if it holds above 50, I think this is a wave 1 and a wave 2. I think what we can see is that Visa and iPay could act as leading indicators for Square Cash and PayPal in the future. Visa and iPay could break this high, go the length of wave 1, place of the wave 2 low, all the way up to 77 before a shallow wave 4 and a wave 5 higher. The length of wave 1, place of the wave 4 low, can take iPay, an ETF full of eCash stocks, an ETF that actually holds some low beta stocks like Visa, can go to 96. So if we're above 50, I think what we'll see is that Visa and iPay will turn around. And I just wanted to add this as a supplemental chart with PayPal and Square Cash, because the downside levels are not as clear with those. But here is Visa. Visa's looking a little pretty right now, and what I'm trying to show is that we kind of have a little bit more evidence than iPay that Visa's putting in a reversal. So Visa and PayPal, the last time I checked, were 6% holdings each of iPay. I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. I believe this is another wave 1 and another ABC wave 2 at the 78.6% retracement. So I believe that Visa will go the length of wave 1, place at the wave 2 low, all the way to 263 before a shallow wave 4 and a wave 5 higher. All in all, waves 1, 2, 3, 4, and 5 can take Visa dramatically higher to 326. It's not too dramatic, but for Visa, that's a pretty low beta stock that waves 1, 2, 3, 4, and 5, which would end a red wave 3, in my opinion, could take a pretty low beta stock all the way to 326. So for time, and this could be very helpful with Square Cash and PayPal, this is from November 2020 to August. So that's about 9 months. The length of wave 1, place of the wave 2 low, says in 6, 7, 8, 9 months, 7 to 9 months, we'll see that Visa is at 263. More importantly, we'll see that iPay and Visa have both broken this high that PayPal formed in July. This is wave 1 and wave 2. The length of wave 1, place of the wave 2 low, is 263 for Visa. So I want to see a couple things. I want to see Visa above 179. I want to see ARKK above 27. And I want to see iPay above 50. Those are kind of supplemental levels with the downside levels we have in Square Cash and PayPal. I believe this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. The length of wave 1, place of the wave 2 low, says 263 is next. Most likely in the summer to the second half of the year, we'll see Visa in the 260s before a shallow wave 4 and a wave 5 higher. So that's Visa. Let's talk about ARK real quick and refresh before we look at ROKU, before we look at Zoom, and before we look at Fastly, because Fastly, ROKU, and Zoom, they are below the 78.6% retracement. So for ARK, this is a wave 1 and a wave 2. This is another wave 1 and another wave 2 at the 61.8% retracement. So very similar to ARKF holding 27. This wave 1 high is 60, which lines up with the 78.6% retracement. So 60 is a little wide, right? So I think that ARKF holding above 27 is not only a very important chart for PayPal and Square Cash, it's also a very important chart for ROKU and for Zoom. And obviously, they're probably all going to move together as they're all mostly ARK holding. So here is ROKU. ROKU is lower than this wave 1 high. So I'm looking for this wave 1 high on the smaller degree to act as a pretty serious support level, that ROKU will have a reaction from the 61.8 to 78.6% retracement. The length of wave 1, place at the wave 2 low, in the future says that ROKU will break this high. Okay, so ROKU just breaking this high, that's 300% higher than the current levels, right? That is dramatically higher than the current levels if ROKU gets above this high of 490. But I think that 1, 2, 3, 4, 5, wave 1 and wave 2 say that 490 won't be where ROKU stops. At minimum, ROKU will go the length of wave 1, place of the wave 2 low for a wave 3 target of 623 in the future. So there's dramatically higher risk reward with growth stocks and recent IPO stocks, right? I'm never going to talk about a value stock going on a minimum target 400% higher, right? But I think this is a 1, 2, 3, 4, 5 wave 1 for ROKU. I believe that ROKU will hold the 78.6% retracement of 125. We did break below 173. So ROKU's broken this level, which was the original stop of 272. Now it's broken this level, which was the next stop of 176. So I believe that this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 between the 61.8 and 78.6% retracement. I believe ROKU has a lot of supporting evidence from Netflix and from a lot of streaming stocks, but mostly Netflix. I could see Netflix and ROKU turning around together in the streaming sector. I want to see Netflix's setup play out. I want to see ARKF hold above 27. Right now, the 78.6% fib is 125. Above those levels, 1, 2, 3, 4, 5, wave 1, ABC wave 2, Roku will turn around, prove that this is a selling climax. This is retail margin capitulation. This is getting out every retail trader that thought Roku was the future, because they were right. Roku is the future, quote unquote. Roku could be a future Netflix. Okay. But the problem with most kind of retail traders is that they've never seen the Netflix chart. They've never seen the Amazon chart, right? They've never looked at these analogs. They never looked at the Tesla analog. They've never seen that they made Netflix super difficult. Super difficult. Netflix has done worse than this twice in less time and gone deeper on a percentage basis. But I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 between the 61.8 and 78.6% retracement. I think that Roku's going to turn around. I'm going to go break this wave 1 high of 490 and go much higher. So I want to see the Netflix setup play out. I want to see the wave 1 low hold. I also want to see Roku above the 78.6% retracement. I want to see a reaction, and I want to see a clear low at least to trade against. So Roku's broken both of the stop levels that I've given. So there could be this idea that we have maybe a wave 1 formed from this low, and then the next opportunity is a wave 2 to trade against this low. That could be the next thing. I think right now, I just hold high beta growth stocks because I know they're going to make these difficult. I know they're going to get every retail trader stop. They're going to get the margin capitulation out just to make them chase it higher. So I think that Roku is going to end wave 2 between the 61.8 and 70.6% fib, hold above 125 with the Netflix setup with ARKK holding above 27, go turn around, prove this is all accumulation. This is retail margin capitulation before a dramatic rally higher. The length of wave 1, place of wave 2 low, says Roku going above 490 is a very minimum expectation. Even a minimum expectation for wave 3 would be 623. So this is from 2018 to March of 2021. Okay, more than a year, more than almost 2 years. But I think that this is going to be a faster wave 3 than this wave 1. I think it's going to be a further wave 3 than this wave 1. We can kind of see why they're getting everyone out of ARK. They're getting everyone out of Zoom and Roku. I think it's because they're great opportunities. I think the ARK setup and the ARK-F setup and the Netflix setup, Roku bulls really want to see those levels hold because we're not really getting a great level right now. So here's Zoom. Zoom forms a 1, 2, 3, 4, 5 wave 1, and it does this obscure rule in Elliott wave theory where a clear impulsive structure does not end with momentum divergence. So what does all that mean? Well, from an Elliott wave perspective, wave 5 must end with momentum divergence. That means if, in theory, someone turns on the weekly chart, someone turns on the monthly chart, and the high is made, but there's no momentum divergence, that this is not the end of an impulse. The Elliott wave theory is that wave 5 ends with momentum divergence. So since this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2, this is most likely not a wave 5 that occurred. I think that this is a wave 1 that occurred. Now we are at the 78.6% retracement. So Zoom, like Roku, like Fastly, doesn't really have a low to trade against. I think actually for Zoom that this wave 1 high could be very nice of 107. I want to see Zoom hold above. But I just hold growth stocks. I take half position sizes because I know they will make these difficult. All right. They will call everyone who is able to hold this a retail bag holder. Okay. So I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. The institutions don't care about being called wrong on the internet. I believe they've been buying Zoom this entire time. They want to control all the supply of Zoom, get all the retail traders out before whatever that is, right? And that could be Google. That could be, who knows, right? We don't know. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2, right? We didn't know what the metaverse was or what that word even was 4 or 5 months ago, right? We didn't know there was going to be a lockdown in 2020 that was going to cause this. We don't know what the future holds, but we know that there's probably a lot of evidence that institutions really want to get retail out of ARK and they want to control all that supply. And I think that Zoom and Roku kind of show why. 1, 2, 3, 4, 5 wave 1, ABC wave 2, above this wave 1 high of 107, Zoom can turn around, and just breaking that high is a 400, 300% return. Just breaking that high. The minimum expectation from an Elliott wave perspective, if we break that high, is that the length of wave 1, place of the wave 2 low, could take Zoom to about 690. So I think it could be similar to Roku, where since there is no low to trade against, we look for a wave 1 impulse to form and a wave 2 to buy against. 1, 2, 3 For me, I just buy whatever I think is a big enough dip and I hold, because I know for the best opportunities, they're going to make retail traders feel very stupid. So here's Fastly, very similar to Zoom, very similar to Roku. Great opportunity being made very difficult. And there's not really a low to trade against. So this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 for Fastly at the 78.6% retracement. I believe this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low can take Fastly to 136 for a minimum. The minimum expectation for wave 3 is that it has to break the wave 1 high, right? That doesn't mean that Fastly has to go to 136, right? I can't tell my broker that Fastly's in wave 3, but the minimum expectation for any type of wave 3 is 136. That is much higher, 400, nearly 500% higher than the current levels. But the length of wave 1 placed at the wave 2 low, that can take Fastly on a minimum wave 3 to 155. And that's just a minimum wave 3 target. Realistically, in Elliott wave 3 is the 161.8% extension of wave 1. So it could be a lot higher than 155. So for Fastly right now, there's not really a level to trade against. So that's why I take smaller position sizes. But I think Fastly holds 25, this wave B high. And this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. I want to see Fastly turn around. I think I want to see ARK and ARKF, what we've just talked about, hold above 60 and 27, and that Fastly will be with them wave 1, wave 2, while ARK is breaking this high that a lot of the growth stocks formed. I think that Fastly could be outperforming ARK. It could be outperforming a lot of the software sector. The next rally is a wave 1 and a wave 2. So a wave 3 to about 155 is next before a shallow wave 4 and a wave 5 higher. I want to see 25 hold. Here is Alibaba. We'll talk about Chinese right now. The Chinese growth stocks, I think they got a little bit of evidence from Taiwan semis. Here is Alibaba. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 at the 78.6% fib. So I think just like Alibaba and NetEase and Xpeng and a lot of these growth stocks, they're going to make these opportunities difficult for a good reason. So I am an Alibaba bag holder from the 160s. I think it's going to be very similar to Xpeng, where I'm a bag holder for a couple of months, and then all of a sudden, we're oh, this is a great stock. 1, 2, 3, 4, 5 wave 1, ABC wave 2 at the 78.6% retracement. So I think Alibaba will go. The length of wave 1 placed at the wave 2 low. I am planning to sell Alibaba, half of my Alibaba position, near 500, because a minimum wave 3 target is 372. Realistically, wave 3 will go much further than the length of wave 1 placed at the wave 2 low. So I'm looking to hold Alibaba for a very long time. Even in the most conservative view, this is a wave 1 and a wave 2. If at any point in the future we're above 319, the minimum equal legs target is 372 for wave 3. Then we'd have a shallow wave 4 that retests the wave 1 high before a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is at least the length of wave 1 placed at the wave 4 low, then I will be able to sell half of my Alibaba above 500. Okay, and I wouldn't sell all of it there, because that would mean that I might have caught something that is huge. This could be what we just talked about with MasterCard, what we just talked about possibly with Amazon and maybe NetEase next, that this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. If we're above 319, the best thing for me to do might not be to sell Alibaba for several years, because this could be a multi-year breakout that comes from this. So if we're above, we actually don't have a horrible level to trade against right now. If we're above 108, I expect Alibaba will go the length of wave 1, place at the wave 2 low, fill out the left side of the base, the right side of the base, and go significantly higher. So I'm going to keep holding Alibaba. I think it's looking pretty good. Here is NetEase. We're starting to see some of these Chinese names turn around. I think this is a wave 1 and a wave 2 for NetEase. This isn't the sexy, e-commerce stock or the Chinese internet stock, but it's a really important one for Chinese growth. I think it's a lot of nice evidence, right? This doesn't look as bad as kind of some of these other names. I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. Wave 2 retest the wave 1 high. So I believe NetEase will go the length of wave 1 placed at the wave 2 low. NetEase will go up to 175 before a shallow wave 4 and a wave 5 higher. I think NetEase right now needs to hold above 77, and that's a lot of nice levels to the downside for a lot of Chinese internet names. I think we'll see NetEase above 134, and I think what's going to happen is we see NetEase above 134, and people are still bearish Alibaba. People are still bearish Baidu. People are still bearish Wayfair. but they just got a huge leading indicator from NetEase. But since NetEase is boring, no one's really going to care that it's above 134, but it's going to be a massive piece of evidence that the Chinese internet correction is over and that the institutions were loading up Alibaba and Baidu and NetEase the entire time. And I think they were. So NetEase is giving nice levels. If we're above 77, the length of wave 1 placed the wave 2 low can take it all the way to 175. So that's NetEase. Here is Wayfair. Wayfair and Fiverr. They're in the e-commerce sector. So we'll see. This is a wave 1 and a wave 2. This is another wave 1 and another ABC wave 2. So we started this video talking about Amazon. I think that this is, another e-commerce name that could do quite well. It's another wave 1 high getting retested. So that's really pretty. Also, let's just look at this Wayfair chart, right? This is how they make growth stocks, right? And if someone's biggest fear is being called wrong on the internet, or I heard someone say that they stay away from stocks that have relative weakness, right? If someone says that, then they're just simply never going to buy a growth stock ever, because all of the growth stocks make investors feel like idiots before the explosions, right? You think this was some coincidence that right before this big explosion, we had this scary shakeout where everyone who bought Wayfair feels really stupid. Oh, they reported earnings, right? There was this event. There's always an event. Okay, we don't know what the future events are going to be, but I think Wayfair shows they could be very bullish for not only Chinese stocks, e-commerce stocks as well. Wave 1, ABC wave 2, and on the larger degree, wave 1, wave 2. So this could be wave 3 of wave 3 that begins if we're above the 61.8% retracement, which is 146. That's usually a little tight for growth, but I think it's a nice stop right now. I believe this is a wave 1 and a wave 2. We'll see Wayfair turn around with NetEase, with Alibaba, go above this high, confirm that this is a really pretty base, really kind of more of a bull flag. And we're going to go the length of this rally, place to this low. Then if we're ever above 349, it would be quote unquote confirmed from an Elliott wave perspective. The next minimum target is 510. So that's what I have in mind for Wayfair. Here is Fiverr. Fiverr looking pretty damn good. It's at the 78.6% retracement. So I guess it's not looking good from where I talked about it, but it's looking good from the standpoint that we could see an extremely important correction in not just e-commerce, but in a lot of kind of global stocks. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 at the 78.6% retracement. So there's not really a great downside level to trade against at all for Fiverr. But I think this is a wave 1 and an ABC wave 2. The length of wave 1 placed at the wave 2 low can take Fiverr up to 403 from 85. Then we'd have a shallow wave 4 and a wave 5 higher. We're not even going to talk about that. Just Fiverr replicating this rally at any point in the future would be over 400% from the current levels. And realistically, wave 3 is bigger, stronger, and faster than the length of wave 1. So this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 for Fiverr. So I think that we're going to go the length of wave 1, place the wave 2 low to 403. I'll talk about O and LN since Fiverr doesn't really have a great stop, but it is at, to the dollar, the 78.6% retracement. So here is O and LN. It's a little better downside level than anything Fiverr has. It's a wave 1 and an ABC wave 2, kind of similar to Alibaba. We're at the 61.8% retracement. The length of wave 1, place of the wave 2 low, says that it's not just going to be Amazon that rallies. Amazon's going to rally with Alibaba. Alibaba's going to rally with the Chinese stocks. This is a wave 1 and a wave 2. We're going to end wave 2 at the 61.8% retracement. I want to see O and LN hold above 42 since Fiverr doesn't have a great level to trade above, kind of similar to the idea of ARKF and ARK. They're all kind of identical charts. Here is TWLO. Now there's one thing that this person did get right. I was wrong about TWLO. This actually did surprise me. So I'll give you this. I was wrong about TWLO. I thought this would be a wave 1 and a wave 2, and this would be another wave 1 and another wave 2. So I did not expect that we would break below 216. So I was wrong about TWLO, but am I wrong that it's a really nice opportunity that they're making difficult so the retail traders only sell just to buy, at twice the current price? I'm not sure. I don't think I'm wrong about that yet. I think this is a wave 1 and an ABC wave 2 for TWLO at the 61.8% retracement. All right, they've gotten out every retail trader stop, just like PayPal, just like Square Cash, right? Anyone who said TWLO is the future, right? They feel like an idiot. But they might not be. I think this is a wave 1 and a wave 2. So TWLO, we don't have a great level to trade above. Okay. But if we're above the 78.6% retracement of 151, we'll go the length of wave 1, place at the wave 2 low. TWLO will fill out the left side of the base, the right side of the base goes significantly higher into the the 600 range would be a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. So once again, they're going to make TWLO difficult. I think it's above the 78.6% retracement. The length of wave 1 placed at the wave 2 low and take TWLO to 603. So I was wrong about TWLO. Maybe it's kind of like Roku. It's kind of like Zoom, where what we can look for in the future is a wave 1 to form and then a wave 2 to trade against. Okay. But for me, I just buy what I think is a good enough dip and hold. Okay. Because I know they're going to make these extremely difficult, especially if I'm right about them. So this is a wave 1 and a wave 2. Really, the only guarantee in trading is that if someone actually does find a monster, they're going to feel like a huge idiot holding it for a while. This is a wave 1 and a wave 2. If we're above the 78.6% retracement, or maybe if we form a wave 1 and get a wave 2 to trade against this low, TWLO can go break this high of the 450s, do exactly what ARK, the setup is looking for, exactly what the ARKF setup is looking for, prove this is accumulation, prove this is a base, and then we're going to fill out the left side of the base, the right side of the base, and start heading into the 600s in the longer term cycles. This rally is from March to February, right? So if wave 3 is in time and price the size of wave 1, 11 months from now, if wave 2 ends and we're within wave 3 would be bigger than wave 1 and it would be faster than wave 1. We could see TWLO hit 600 in 11 months if we end wave 2 and go higher. So I want to see TWLO form a clear low. I want to see it hold above 151, but I think it's got a lot more upside. Here's IPO. About IPO, we'll talk about Palantir. IPO is giving nice levels right now, and this is pretty similar to a couple charts we just looked at, right? Doesn't this kind of look like ARK? Kind of looks like ARKF. Kind of looks like ONLN, right? That's not an accident. This is a wave 1 and a wave 2. This is a huge wave 3 and an ABC wave 4. So a lot of people, right, they're bearish ROKU, and they're bearish a lot of e-commerce stocks, but they're not as bearish Amazon, and they're not as bearish Netflix. But it's important to realize that if Netflix and Amazon are doing really well, then a lot of e-commerce and a lot of streaming stocks are going to be doing very well. I think the most conservative view is that this is a wave 1 and a wave 2 for IPO, and this is a wave 3 in an ABC that is ending wave 4. We are now at the length of wave A, place the wave B high, where wave C is ending at the 50% retracement. So if we're above 42, this kind of gives nice levels for Palantir, because Palantir is not really giving a low to trade against right now. Then the length of wave 3, place the wave 4 low, says just like ARK, just like ARKF, just like TWLO, right? IPO is going to go turn around, fill up the left side of the base, the right side of the base, have a high volume base breakout and confirm that this was all accumulation, right? And is anyone going to, go on Twitter and say, oh, actually, that guy was right? All those ARK stocks, all those growth stocks, right? They were being accumulated by institutions the entire time, right? And this was just a massive retail shakeout and bear trap before an explosion higher, right? No, they didn't say that about Microsoft. They didn't say that about Nvidia. They didn't say that about Apple or Tesla or Bitcoin from 12K or, right? They're never going to say that, right? They're just going to make new accounts and, do it, but that's okay. I'm here. I like the trash talk. I like the trash talk. Less curse words, less inappropriate GIFs, and we can have some fun. I like that, honestly. 1, 2, wave 3, ABC wave 4. If we're above the 61.8% retracement of 42, the length of wave 3 places the wave 4 low. So we'll have an IPO base breakout for IPO, and we're going to go above 100. We're going to go all the way to 100 for a minimum wave 5 target. Now, I don't think that the actual right count is that is a wave 5. Okay, that's the conservative view. The conservative view is that this is a wave 5 that I'm expecting. What's kind of the more accurate, kind of the more aggressive view, kind of the view that ARK and ARKF really support? It's this, that's not a wave 3, that's not a wave 4. That's another wave 1 and another wave 2. That means that in the future, the length of wave 1 placed at the wave 2 low, says 105 is a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. So I think ARKF and ARK and IPO, they're kind of interesting in that we could actually see ETFs double before a shallow wave 4 and a wave 5 higher. So ARKF and IPO, in both cases, the minimum equal X target is the length of this rally placed at this low, and that could take both over 100% higher than their current levels. That means that their biggest holdings would most likely be outperforming. So I want to see IPO hold above 42. That's really important for Palantir. So this is a wave 1. I believe this is a wave 2 ending at the 78.6% retracement. So I was wrong that Palantir would hold above 17. I was looking for what I'll call in a second the Unity software treatment. That from this low, we form a wave 1 and a wave 2. We go break this high in a more, swift fashion. Palantir right now is kind of giving it the Lucid Motors treatment. We look at Lucid Motors in a second. It's exactly what Palantir looks like right now. everyone feels dumb. Everyone who called Palantir the future feels like they got scammed. They might not be wrong, okay? This is a wave 1 and an ABC. Wave 2 at the 78.6% retracement. So there is no low to trade against. That's kind of the problem with Palantir. But this high of 11.42, there's a level to be above. And I think if we hold above that level, what we could see is that Palantir will go the length of wave 1 placed at the wave 2 low, right? And we've seen a lot of option buying on Palantir where this could be a springboard selling climax. Every retail trader and their mother had a stop below 17, right? Now they feel like an idiot, only to buy back in the future. So what it could be for Palantir, similar to what we just talked about with ROKU and Zoom and TWLO, there could be the idea of looking for a wave 1 and then a wave 2 to trade against in the future for wave 3 higher. That could be an opportunity, but I think right now that this is a selling climax for Palantir. We're at the 78.6% fib. I believe we'll go the length of wave 1 placed at the wave 2 low. Palantir can go up to 51 in the future. Now, that is about over 300% higher for what would be in the future a minimum wave 3 target, right? So Palantir, they might be making retail feel like idiots for a good reason, okay? Because they want to control all of that supply. They know every retail trader have their liquidation level, their stop out level at this low. Okay, when we look at Lucid Motors in a second, we could see what happens. But I want to see Palantir hold above this high of 11.42, and that is getting a little wide. So that is why I take half positions with growth, and I think that's also why I want to see the IPO setup play out. But we started this video talking about Xpeng and Lee. We're going to end this video talking about 2 other IPO stocks in the IPO ETF, because we've already seen one of them that I predicted, by the way, right? No one ever counter trades me on the one I got right. That's interesting. So, but I will admit, okay, if I have a 50% hit rate, which this user kind of says that I do from the independent review, then in theory, yeah, someone could counter trade me and develop a system doing that. So honestly, like, more power to you, right? If you really do that, well, I'm just curious how you missed Nvidia, AMD, Microsoft, and Tesla, and Apple, and Pfizer. But I'm sure you have a reason for that. This is a wave 1 and a wave 2 between the 61.8 and 78.6% retracement for Unity Software. So Unity Software actually has a nice level right now. If it's above 104, this could be wave 1 and wave 2. The length of wave 1 placed at the wave 2 low. That could take Unity Software to 246. And we've already seen the IPO base breakout. This is huge evidence for Palantir, because we're asking the same question. Is this, did retail get scammed? Or is this a shakeout? In Unity Software, it might be the leading indicator that Palantir will be in the future above this IPO high. And we have gorgeous setups from Xpeng and gorgeous setups from Lee, and also Lucid Motors possibly, that show that we're going to break this IPO high for all those names. We're going to have IPO hold above 42, go the length of wave 1, place at the wave 2 low, all the way to 246. So that would be a lot further in the future, but I think right now we'll hold above 104, and I want to see Unity Software turn around, and I want to see it do it with Palantir, with Xpeng, with Lee, and with Lucid Motors. So Unity Software above 104, it's a big piece of evidence because it's already broken this IPO high. And what we've seen in this video from Xpeng and Lee, Unity Software is not going to be the only IPO stock that breaks its high. So what I'm looking for is all the stocks that haven't yet. And what we've seen recently, one by one, they're starting to make runs at these highs, and all of them are being aggressively accumulated in the options market right now. Now, they could be playing a move to the downside. I've shown in the course of this channel why we pay attention to stocks that are being aggressively accumulated by the options market, okay? This picture is from July 20th. It's all Tesla and Marathon Patent Group, and yes, there is Zoom on this level, but we have seen so much. Look at this, Taiwan Semiconductors, Tesla, Marathon Patent Group, and Plug and Fisker before they had nice rallies. Now, some of these, they're playing the downside, right? They were playing the downside in Zoom. It looks like they were playing the downside until Ray 2, right? So this isn't a magic screener, but all these stocks did have big moves. That's why I use low implied volatility with high options liquidity to filter for trades. And the point is, if you've been looking at the bar chart straddle and triangle screener, you've seen Palantir on this several times every day. Okay, but this is from December 29th of 2020, nearly a perfect score, right? So you can counter trade me. I would not counter trade this. This is perfect. HD, Boeing, Royal Caribbean, MPC, Valero, Tesla, Nvidia, Goldman Sachs, cruise lines before they exploded in the winter, Bank of America. The only one that didn't explode was PBR. Google, Lowe's, and McDonald's all dramatically higher, dramatically outperforming the market in 2021, at least at some point. So anyway, this is a 1, 2, 3, 4, 5 wave 1 and a wave 2. Lucid Motors, they were buying a lot of options on. Anyway, this is a wave 1 and a wave 2. And I think Lucid Motors kind of shows maybe what Palantir is doing right now, right? So I can't tell my broker that Palantir is getting the Lucid Motors treatment. Okay, I can't tell that to my broker. I can't tell my broker that Unity Software is already above this high, right? But I think this is a wave 1 and a wave 2. And what Lucid Motors is about to do, what maybe Xpeng is about to do, what maybe Lee is about to do, they're going to prove that this was all accumulation out of the IPO. And that's going to cause IPO to hold above 42 and break to a new all-time high. Palantir likely would be outperforming if that happened. So for downside levels, I want to see Lucid above 31. That's generally pretty tight. That's generally pretty damn tight for a growth stock. But I think the general idea, this is a wave 1 and a wave 2. This is a 1, 2, 3, 4, 5, another wave 1 and another wave 2. So we'll go the length of this rally, place at this low. More importantly, we'll see Lucid hold 31, go break this high of 57, and go break this high of 64 in the future, prove that this is a 1, 2 wave 3, likely with Unity Software doing the same thing, 1, 2, 3, well above the IPO high. Another stock with Unity Software that would confirm an IPO base breakout within the IPO ETF. Here is Bitcoin, Ethereum, and Ripple. I should start with Ethereum, but I'll start with Bitcoin right now. Bitcoin, remember, I trade bar chart. I know that every exchange kind of has different levels. So Bitcoin, I am trading BTC USD on barchart.com. That is where I'm getting my levels. 1, 2, 3, 4, 5, wave 1, ABC, wave 2, between the 61.8 and 78.6% retracement. So if Bitcoin is above 37K, but really, I'm going to be using Ethereum to get the downside levels. But what I could see is that this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. So Bitcoin above 37.5K, call it 37K. That's a little tight for something that has a high beta like Bitcoin. Bitcoin's beta is extremely high. But what I could see is that this is a wave 1 and a wave 2. Just like Ethereum, it could go much higher. The length of wave 1 places the wave 2 low. If Bitcoin replicates wave 1 in time and price, says 4 or 5 months from now, Bitcoin could hit 80,000 before a shallow wave 4 and a wave 5 higher. Then the length of wave 1 places the wave 4 low would give a wave 5 target in the future of, you can read it, 109,000 in the future, possibly on the table for Bitcoin. 1, 2, 3, 4, 5, wave 1, ABC wave 2. I think we hold 37.5K, but I'll say it for the 50th time. I'll probably say it for a 500th time. I will be using Ethereum as the best gauge in the market because it has not broken this low yet. And what I think Ethereum could be doing is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. This kind of wave 1 is more clearly subdivided into 5 waves than Ethereum. So that's why I think Ethereum is a really nice gauge, because this is a clear 1, 2, 3, 4, 5 waves subdivision of this wave 1. That means that there could be a higher likelihood that Ethereum will not break this wave 2 low of 2.6K. So I think this is a wave 1 and a wave 2 from this low. We'll go the length of wave 1, place the wave 2 low, all the way up to about 55.1K before a shallow wave 4 and a wave 5 higher. All in all, waves 1, 2, 3, 4, and 5 can take Ethereum to basically 7K. And in this count, that would only end a red wave 3. So Ethereum has a lot of supporting evidence, but it is a lot of evidence for Bitcoin. Let's talk about Ripple right now. I know Ripple seems silly, right? I know Ripple kind of seems like, why are we talking about Ripple? What we could see is that this is a wave 1 and a wave 2. I had a post in December, another one that the counter traders seem to miss, where I said the minute that Bitcoin broke this high, I said Ethereum's next, Litecoin's next, and Ripple's next, okay? Ethereum and Litecoin, the counter traders missed it, but they exploded above that high. Now, if you really think I'm a counter trade, remember, I don't give investment advice, but if you really think I'm a counter trade, if you really think that betting against me is just something that you can do and make a lot of money, which according to this guy, you can, right? That's the thing. This guy says that I have a 50% hit rate. So apparently you can just bet against me and make money. So if you really think I'm a counter trade, here you go. This is Ripple. Have fun. Have fun, because I'll tell you what I think of Ripple. I think this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2, ending at the 78.6% retracement. So I believe Ripple will hold above 51 cents. It will go 1, 2, wave 3 dramatically higher. I believe this is a wave 1 and a wave 2 that ended at the 78.6% retracement. So counter traders can make a lot of money shorting Ripple to 17 cents if I'm wrong, okay? I don't think that's going to happen. I think this is a wave 1 and a wave 2. I think Ripple is going to $3 next before shallow wave 4 and a wave 5 higher. On the larger degree, I believe Ripple is going to the lower bound of the pitchfork, then the median of this Andrews pitchfork, which could be $4, $5 in the future, possibly even higher than that. So what I'm looking for is that I said when Bitcoin broke this high, I said Ethereum, Litecoin, and Ripple are next. So counter traders, don't miss this one. I think that Ripple could be the next one to go break above this high. That's just something that's on my mind. You're lucky you missed Ethereum and Bitcoin, so don't miss Ripple. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 for Cardano. Now, Cardano is getting pretty tight, but I think it's a nice chart that illustrates the risk reward right now in crypto. This is a wave 1 and a wave 2, so I believe that Cardano will hold above this low of about $1. It's basically $1 flat. That is a wave 1 possibly that's begun. Now I think that this is a pretty clear 1, 2, 3, 4, 5 wave subdivision. Again, I can't tell my broker that this is a clear 5 wave subdivision, but I think this is a wave 1 and a wave 2. I believe Cardano will hold above $1, go the length of wave 1, place of the wave 2 low, up to $3 before a shallow wave 4 and a wave 5 higher. But I really think that Cardano could be a nice risk reward opportunity 1, but also a nice risk reward gauge for the broader crypto market. If it's above that psychological dollar level, it could be going much higher. And remember, that would just be the minimum wave 3 target. We'd have a shallow wave 4 before a wave 5 higher. But let's make a new high first. I think we'll see Cardano ADA hold above 1, possibly go to a new all-time high above 3. Remember, this rally is not a short rally, right? That's the thing. Marathon Patent Group had a very quick rally from 25 to 80, right? Another one that the counter traders missed. But you know, this is a 1, 2, 3, 4, 5 wave 1. I think this is a wave 2. So don't miss Ripple, don't miss ADA, don't miss Ethereum. You know, this could be a wave 1 and a wave 2. Cardano could be going to $3.10 for a minimum wave 3 target in the future. I think that it gives great downside levels, but I think that Marathon Patent Group gives the best downside levels, right? Wave 1 and wave 2. It didn't really matter how much I talked about Marathon Patent Group or Tesla or Microsoft or Nvidia or Tesla, right? Or Pfizer, you know, or Apple or the Nasdaq or Google or Facebook or, you know, but anyway, they somehow missed the ones that triple and quadruple. So get that into your system. However you do that, that's very impressive. But I think this is a wave 1 and a wave 2. I believe it will hold above $18. We'll go the length of wave 1, place of the wave 2 low, all the way to, yes, 90 for Marathon Patent Group. And yes, that is a minimum wave 3 target. So just recently, I believe 2 days ago, we saw Riot Blockchain, we saw Marathon Patent Group, and we even saw Canaan Creative on the bar chart straddle strangle screener. We've seen a Hut Mining, we've seen Bit Digital, 0% implied volatility, ranking percentile, high options liquidity. I believe that the institutions are loading the boat. And the last time they did it, helped to predict a 300% rally. It could be happening again. I think we hold above 18. I think Marathon Patent Group heads to 90 before a shallow wave 4 and a wave 5 higher.